Let's get some instant reaction on this morning's bank earnings from Stephanie Link. She is Chief Investment Strategist and Portfolio Manager at Hightower Advisors, also a CNBC contributor. And Steph, what do you think? Let's just start with BlackRock. These numbers that we're seeing, a little weaker than anticipated, but maybe not a huge surprise given what we've seen with market turmoil.
Yeah, I mean, that's the theme, Becky, and good morning. That's the theme from the bank so far. It's been all about lower fee income, investment banking. We saw it yesterday at JP Morgan, down 54% year over year. Morgan Stanley down 30% year over year. Today, you're seeing it also at BlackRock as well. Wells Fargo, the same thing. So that's going to be the theme. It's not just one company-specific issue. It's the overarching markets are in turmoil, and these companies are unfortunately seeing the implications of that. So I think you have to pick your spots within the banks. I actually added to Morgan Stanley yesterday because I did think under the surface, the numbers were actually pretty good. You looked at net interest income was better, trading total revenues were better, net new assets were up 53 billion. That's a 4% organic growth annualized. And this company now yields 4% and trades at 1 times book. Wells Fargo this morning, that stock also, getting hit from not only the markets, but then mortgages, right? And so that is kind of the double whammy. But they actually did a good job in expenses. I was just looking at the numbers, down 3%, loans up 8%. And again, this thing trades at 0.9 times book. So I think you got to pick your spots in terms of where you want to be in the space. But I do think longer term, these companies are so well capitalized, so much better than back in 2008, 2009, or even in 2020.
Steph, do you own Wells Fargo?
I do. I own it because it's a restructuring story, right? And you have kind of not new management any longer. He's been there. The CEO's been there for over 2 years. But the executive branch has changed completely. They are focusing on cost cuts. I want to hear them say this morning that they are committed to 51.5 billion in expenses. That would be a good thing. And I just think that there's a lot that they can do to turn it around. And of course, the asset cap is an overhang on the name, and as soon as that gets lifted, I think that will be a nice catalyst. Don't know when that's going to be, but that is certainly something that I'm looking forward to at some point. But again, at 0.9 times book, I think that stock is pretty attractive.
Your largest position is United Health, and they were out with earnings this morning as well. They came in with earnings that were $5.34 a share. What are you thinking?
Yeah, I'm a sigh of relief because it is my largest position. But this one is just, it's just a behemoth. They're doing such a good job across the board. They are the dominant payer of scale in commercial, in Medicare, in Medicaid, in Optum, which is that local business, PBMs, healthcare information technology and services. And so today they actually beat and they raised. So they're seeing the benefits of the COVID costs also coming down for them. And then they also indicated that membership was actually higher than expected. So that's a good thing. And then, of course, Optum, that's the big behemoth for them. And that continues to grow double digits and will continue to do so for quite some time. So not cheap, Becky. It's at 24 times. But for a company that consistently delivers, I'll pay that kind of multiple.
Let's take a step back. Just look at the overall market. We've seen 5 down days in a row. You do have futures positive this morning. What are you thinking as we head into a weekend, especially after the really hot inflationary numbers we got this week, too?
Yeah, and we have to get through retail sales this morning and University of Michigan sentiment, which is not going to be good. It's a tough week. It's a tough time. We have a lot of inflation, and I know that the conversation has turned to we're at peak and it's going to get better because commodities have rolled over. And I believe that too, but I think there are other parts of inflation that we have to deal with. And as a result, the Fed is going to continue to be tight. And as long as they're tight, that it's going to be hard for the markets to really, push forward. I mean, we can be in a trading range, and I think that's what we're going to be in. And so we can get back to some of the highs, we can get back to some of the lows. But until we get a Fed that kind of backs off and says, okay, we're where we want to be, and we're going to just see where the data comes in, that, I think, is the thing we have to wait for. And I don't think that's going to happen until sometime in the fall. So we kind of have this murky time in the next couple of months.
Retail sales, if that number is really strong, is that something that the market almost reacts badly to? Because the Fed's going to be looking at these things about whether they raise by 75 basis points or 100 basis points. What does the market want at this point?
No, I mean, I have to tell you, I think good news is good news. I mean, that's the way I subscribe to life. So I think it's good news is good news. We want the consumer to be healthy. We want them to be spending. They are spending. We know that. And you've heard that from all the banks, by the way. And there's no deterioration at all in net charge-offs or delinquencies so far. We have to wait and we have to watch. But the consumer should be okay. And I think that's good news. The Fed is really just focused on inflation, Becky, and the numbers are just way too high. Not only headline numbers, but even the core. If you want to say that the core PPI yesterday at 8.2 fell from 8.4, okay, I'll give you that it's kind of, it's decelerated a little bit, but it's still quite high. And it's so much further than the 2% number that they really want to see.
Stephanie, thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.